Let me share what I think is happening in Japan and how JPX has been pushing forward toward the growth of Japanese market and where we are headed. First, what is happening in Japan? Several factors are at work at the same time, both within the Japanese market and from outside of Japanese market. Within Japan, the fundamentals of the Japanese economy are improving. Japanese companies' performance is strong. Last year's earnings releases have shown that 3 years in a row, companies' profits are the highest. After decades of deflation, finally, inflation pressure rising. One of the key sources of growth is the household sector. As Mr. Kihara referred to, the Kishida administration has expanded the tax exemption under NISA, the individual savings account, that could trigger the real shift of savings to investment this year. With the new and expanded NISA, many retail investors are joining the market, and more than 1,000 trillion yen that were kept in banks are gradually being shifted from savings to investment. Our role is to maintain a strong capital market that will be the platform for companies' growth and for various types of investors, both domestic and overseas, to gain returns. One of the key initiatives we have been working on since 1999 is the corporate governance reform. This reform picked up the pace under Abenomics in 2012, and with the Japanese government's full support, the two codes, the Stewardship Code and the Corporate Governance Code, were introduced in 2014 and 2015. 9 years has passed, and Japanese companies and markets have made steady progress. For example, the number of independent directors has increased drastically. In 2014, 6.4% TSE first section companies had non-executive directors as at least 1/3 of their board. In 2023, the ratio has risen to 95% of prime-listed companies. We restructured our market segments and introduced 3 new market segments in 2022, April. This new market segment is a new platform for engagement between the listed companies and the investors, where companies will be more aware of the market's expectation and be able to respond better. To effectively use this platform, after 7 months of open and lively discussions with market experts, we put together the proposal in January 2023, and in March made a request targeting prime and standard listed companies to practice management conscious of cost of capital and stock price. We are seeing positive signs of response. More than half of prime-listed companies have responded, and the number has more than doubled since last July. Even better is that 78%, the best response rate, came from the large companies that are trading below book. As a market operator, to maintain a fair and open market, we strive to fill the gap by encouraging transparency and reliability. We are held accountable to the world to explain the progress as well. As all the stakeholders, companies, investors, and government and JPX are aligned, the room for improvement in the Japanese market is the point of opportunity. Market discipline is the most effective mechanism, and investors have the power to encourage change. We expect global investors, such as those here today, to take the lead. Thank you very much.
The Japanese economy is expected to continue to grow steadily. We forecast the real GDP growth of 0.8% in fiscal year 2024. There are 6 reasons why Japanese economy will continue to grow solidly. And first, the spring wage negotiations are expected to result in large wage hikes. Last year's wage increase was 3.85%. And second, there is a pent-up demand for about 330,000 automobiles that could not be manufactured due to the shortage of semiconductors and other factors. This translates into 900 billion yen in terms of personal consumption. Third, inbound tourism is expected to normalize. And fourth, with the end of COVID-19, domestic services consumption has begun to normalize. And if it recovers to its pre-COVID-19 level, domestic services consumption will increase by 2 trillion yen in the future. Fifth, household financial assets grew by 236 trillion yen. And sixth reason is that fiscal and monetary policies will support the Japanese economy. Compared to corporate profits, Japanese stocks are still undervalued. In other words, Japanese stocks are supported by strong microeconomic trends in corporate profits. And even if the macroeconomic data of nominal GDP is sluggish, there is still much room for Japanese stocks to rise. So this is why I'm strongly convinced that Japanese stocks have entered a long-term uptrend.
But I would say, and I note in meeting with companies, a very healthy anxiety around the actions of the Tokyo Stock Exchange and the submissions on cost of capital, I think are very constructive. It's already been referred to the corporate governance reform and the success that has done both in introducing more independence onto boards and more diversity onto those boards, both much needed. And I think at the same time you've got constructive market action and much better governance. And it is no surprise that what we're seeing as one manifestation of that is more willing consideration of takeovers, more buyouts. I find Japan an extremely good market for that. There are a lot of attractive areas in terms of digital enablers, robotics and automation, medical technology, and each of those probably has some kind of a background in Japan's demographic position, that they have to innovate and have become world-leading innovators as a result of the demographics. Japan has gone through a period of deflation, but over the last 20 years, real GDP per capita in Japan growth has been the third highest of the G7. And if you look at it on the basis of real GDP per working capita, it's been the highest of any country in the G7. So the first point I would make is that Japan is and has had to deliver more with less, and that is why, as I said earlier, it is unsurprising that they have become world leaders in industries that have demanded that sort of level of innovation.